He says is, quote, entering the best stretch of relative strength versus the S&P. Let's bring in BTIG's Jonathan Krinsky. So good to see you. So you're a believer.
Well, Scott, the call here really is a relative call more than anything, right? So if we think about small caps up 2 or so on the year, NASDAQ 100 is up about 45%. So that spread, NASDAQ over Russell, we've only seen it greater on a year-to-date basis 2 other times. That was 98, 99. What followed there was small cap outperformance of the next 3 years by over 30% each year. So I think, the call here is we've just basically gone nowhere year to date on the small caps, and 1 of 2 scenarios is likely to happen. If we're at the tail end of this growth scare, this bear market, then I think there's significant upside in small caps and maybe mega caps kind of chop around. And if we're at kind of this inflection where we've kind of run the course for this bear market rally, then I think mega cap tech is probably at the point where it's not immune and going to see some catch down. So yeah, I think in absolute terms, small caps probably have a bit more upside, but really as we think about how to position for next year, I think the bigger fat pitch trade will just be this relative performance compression.
But see, you've been looking for many, many months for a rollover in the overall market. I mean, I've had you on a bunch of times, whether it's on halftime or here. I've cited your notes all the time that you put out. You have not been constructive on the market whatsoever. And I still hear you talking as if this has been nothing but a bear market bounce when there's a cavalry of other people who would argue otherwise.
Well, look, Scott, I think, again, this goes back to what are you looking at? I mean, the concentration in the market is in some ways unprecedented. 2 stocks, Apple and Microsoft, make up 47% of the tech sector. We just had the largest inflows on record in the NASDAQ 100. So I think when you talk about what has the market done this year, I think the bearish call on the indices has been 100% wrong. We'll own that for sure. But if you're talking about the average stock, the bearish call has actually been a pretty good call. Since February 2nd, the average stock is down significantly. And we did have a pretty good drawdown in August, September, October in the mega caps. So I think we're now at a point, again, where a lot of good news is priced in. I think the performance chase, like I said, we just saw massive inflows in the NASDAQ 100. Could the chase continue a little bit more? Yes. But, at some point, you're going to have that conversion, either where it's obvious that data is improving and we're not going into a hard landing. If you say that we're in a soft landing, then why are small caps only at 2% on the year? It just doesn't. The narrative doesn't fit. So we're open to that mindset that maybe the market is entering that inflection point where you're going to get some more breadth confirmation from the secondary stocks, but we just haven't seen it yet. So,
but I'm going to stop you. I'm going to stop you for just a second.
Yeah.
Forgive me. I just want to stop you for 1 second because the last CPI report is the thing that arguably set this, latest stage of the rally off. That's no if. That was fact, right? That report confirmed, followed and backed up by the PPI the following day, confirmed that inflation continues to come down a lot. And even the Fed has suggested that they can now be, quote unquote, patient with what they're doing. So, I mean, it seems like the consensus, at least the market, has started to believe in the soft landing story, no?
Yeah, and I mean, look, I think that was that move in the small caps, right? And so if that's going to continue, you have to ask what is going to outperform, over the next coming months in that scenario. And we think it's probably small caps over large. And conversely, if we're going into a period where, maybe inflation's coming down for the wrong reasons, look, small caps probably go down in that scenario, but I think you're going to see mega cap tech where everyone has been crowding. You're going to see that catch down. So I think in either scenario, the spread makes sense. It's just a matter of which direction is it going. We still think, look, as you get into the end of the year, there's a lot of seasonal aspects to it. Momentum is on the side of the bulls here for tech for sure. But I think as you get into early next year, again, you talked about it with your previous guest, that once the calendar turns, there's often some pretty significant, sizable momentum rotations. And I think, that might be the case here this year as well.
I just don't know why there would be a rotation from mega cap tech into these other areas, and why, if you believe in the soft landing story and inflation continuing to come down, the rotation would actually come from outside the market in, from, what's been happening with yields and also from cash. Why does it have to come, this rotation, always from within? Not this time. It actually may be different.
Look, it could be, but I think you've seen those flows into, like I said, we had the biggest inflows on record in the Nasdaq 100. It's a consensus trade that it works in any environment. And at some point, that just becomes that price becomes too full, right? And so, look, we talked about NVIDIA with you back in August before the last earnings report. Talked about how yes, it was a great company, but maybe it was a little bit of a sell the news, and it had a pretty significant drawdown into October. It's now recovered that entirely. So we'll see what happens tomorrow. But I hear your point. I think the issue really is, again, where is that performance, that next leg, going to come from? And if you're bullish here, I think you've got to look small caps over large.
Yeah. All right. I appreciate it as always, Jonathan. Thank you, Jonathan Krinsky, BTIG.